with that perspective. Well, 271 points lower. We're at 17,055 at this point in time. We have Shibani Sircar Kurian now joining us to take some questions on market. She's Senior Executive Vice President and Head of Equity Research at Kotak Mahindra Asset Management Company. The folks at Kotak have also been cautious for a while. Shibani, thank you for joining in. What are your thoughts now?
Hi, good afternoon.
It's just, the thing which has happened is that the rupee against the dollar is started to the dollar INR is starting to float higher, which was not the case. 80 was very well defended, but now I guess it's not the case. It's finding its own level with the dollar being very, very strong against most currencies. Is that the primary driver over the last couple of days that we're seeing, Shibani? How are you thinking about this leg down that we are seeing and some believe are just about starting?
Yeah, hi, Prashant. If you look at clearly what's happened over the last few weeks is that it's now clear from a monetary policy perspective, the developed markets, including the US, would focus more in terms of taming inflation, possibly even at the cost of growth. When there is a global risk of sentiment in that sort of a scenario, the dollar does strengthen, and that's something that we have seen happening. With India, of course, as you correctly mentioned, the currency had been extremely stable, and some of it is reflected in the fact that our forex reserves have come down over the last few months, reflecting the fact that central bank has been focusing on maintaining currency stability. Now, when you look at India macros, there are a few key factors that we would need to look at, and that would have a bearing on the market. Firstly, in terms of domestic growth has been fairly resilient, even though we have seen some amount of consensus growth estimates being moderated, but on a relative basis, we are still fine. In terms of earnings, again, the earnings upgrade cycle is clearly behind us, and there has been some downtick in earnings. But again, the downtick has been slightly, it's been fairly manageable. It's not been significant. And we believe that in the medium term, mid-teen sort of an earnings growth is possible with operating leverage really playing out. I think the key factor for India is valuations. And of course, with the sharp outperformance that you have seen over the last few months, valuations, both absolute as well as relative, have moved up. If you look at India's valuation premium to the emerging market context, that is trading at all-time high levels. And therefore, with so much of global macro headwinds at play, it is possible that we could see some amount of volatility or consolidation in the markets that we are witnessing at this point in time. In the medium term, the growth equation for India, as well as the earnings growth story and the return on equity story, remains fairly intact. Therefore, we will have to possibly contend with near-term volatility. And, as we have been saying, we believe that, from a company perspective or bottom-up stock picking perspective, some of this could provide an opportunity to look at.
All right. Hi, Shibani. Good afternoon. Good to speak to you as always. Well, and I think one of your NFOs as well had opened for subscription. Not such a bad time, right? If the markets are going to go through some turbulence, y'all could get better entry opportunities. What was the response? Did y'all see a good amount of interest?
Yes, we just concluded one of our NFOs, and I think from a response perspective, the response has been good. And as you said, that some amount of market volatility does provide an entry opportunity. We've been clearly looking at stocks from a medium-term perspective. What we are trying to identify are companies which are high-growth companies gaining market share in their respective sectors, those with strong balance sheets and cash flows, but of course trading at reasonable valuations. And then in markets such as these, you do get opportunities to look at stocks from a bottom-up basis, and that's something that we will keep doing. Okay,
fair point. Well, the market is seeing one more leg down, and the Nifty is now down 325 points again. Like I was saying, the first test of the 200-day moving average is normally defended. There's a second test, which at times can be something which is a bigger test, and now once again back below the 17,000 mark. The 200-day exponential moving average is placed at 16,800, but this doesn't look like a market about moving averages. This is something else happening. Even on the bank Nifty, we're down about 1,000 points now. Shibani, hi, good afternoon. So one thing which has helped our market is the domestic liquidity. I mean, if it wasn't for it, this market would not have been at 17,000, would have been at perhaps 14,000, given the kind of FI selling and global risk off that we have. Do you think this money is here to stay and is going to keep providing support to the market or cushion to the market?
Yes, Anuj, hi, good afternoon. So absolutely, I think that's something that we have seen over the last year and a half with domestic liquidity providing the support.
Oops.
Okay, I think we lost that line there. Just try and have it back, but I think some technical issue there. Markets, by the way, are down 340 points, which means this is, the newest leg down, and which is taking us almost back to the day's lowest point. Are we there yet? I think we should be. The low is
Just about
16,978, and we're at 16,993. So yeah, I mean, 15, 20 points away. That's it. A remarkable change lower, and I think this started at at 225, just about as we were starting the show. The market made this high, and in this leg, and this is all intraday, and of course we've been going one way, which is southwards. Shibani is with us. Shibani, sorry we lost you there. Please continue.
Yes, hi, sorry, I think there was a technical issue. But as I was mentioning that from a retail perspective, I think the big factor which is providing the support is the SIP flows, which continue to remain fairly sticky. So while, of course, we will debate about what's happening on the FII side and whether FIIs will look at India as a separate asset class and whether FII money is back. But I think from a domestic perspective, clearly the factor that retail investment strategies have been fairly sticky. The SIP flows have been sticky, and that does provide some degree of comfort in a market which could see volatility.
All right, Shibani, y'all have been fairly positive on a domestic theme. That's the real estate, the housing theme as well. How do you play it? Do you play it directly? That's real estate companies, or do you believe you could go in with some ancillaries, the tiles, the other home products business, or maybe another way? A guest this morning was talking about playing it via the finance housing companies. Your take?
Yeah, yes, hi Nigel. So we have been positive on the real estate theme. So within the real estate space, the way we have played it is through a mix of owning the real estate developers as well as the home building segment. The home building segment is fairly large in terms of the number of categories that you can invest in. So cement, for instance, tiles, the pipes segment, consumer durables, all of this, which is essentially corollary to the real estate demand. The real estate story, we believe, remains fairly intact at this point in time. While there are concerns that with rising interest rates, you may see some impact on demand. But one must note that if you look at interest rates today on the home loan side, vis-a-vis where it was pre-COVID levels, we are still not so significantly far off, and therefore demand remains fairly intact. The sector itself has seen significant amount of consolidation, which bodes well from the health of the sector. Overall balance sheets have also improved. And we believe that as of now, with the inventory levels in the system coming down, the sector remains fairly well placed.
Okay, Shibani, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always. Let's just look at the market.